what's up guys, and welcome back to another video, another lesson of this mini course. So in today's video is going to be part one of understanding this concept, which is support and resistance, one of the biggest foundation of my strategy that I use on a daily basis. So this lesson, right, is going to be divided by two videos. On the first one, which is this one, where we're going to go deep dive into deep case, explaining to you guys exactly what is support and resistance, right? How to identify support and resistance, how to find support and resistance, and what exactly is support and resistance. On the next video, we're going to do a deep down into the actual market, right? We're going to be doing analysis, showing you guys exactly how to find valid area of support and resistance and how to take trades off support and resistance, right? So make sure you guys are paying very close attention, and let's start this lesson. So support and resistance, right, are basic concept in the trading that helps you understand the price movements in the market. Right, it represents level where the price trend tends to stop and reverse, or where it can struggle to move past. So this level acts like an invisible wall and obviously guides the price. So if you guys take a look at this chart over here, right, resistance is always going to be on top of the market. Support is always going to be on the bottom of the market, right? So I'm pretty sure a lot of you guys have heard that whenever price obviously heads to the downside, you guys are always looking to buy lows. Whenever price is in the high, obviously you're looking to sell the market, right? So support and resistance, something like that, obviously it's not just, as soon as it's down, you're going to buy right away. Same thing if it's up, doesn't mean that you're going to sell right away. But here's the idea, right? So resistance is always going to be on top of the market. And then we have support, which is always going to be on the bottom of the market. So what exactly is support? So support is a price level where the market tends to find a level of support and it stops falling, right? So let's say, obviously, since support is always at the bottom of the market, it's a trend that price is heading to the downside. So let's say we were heading to the upside first, and then price starts heading to the downside, and we reach this area of support, right? So this is pretty much what is the example. Now, how to use support. So whenever price approaches an area of support, which is this case over here, right, this is where many traders are looking for setups, which is going to be a bounce play, right? Meaning that obviously they are looking to look for buys opportunity, right? They expect for price to hit this zone over here and then rise it back to the upside. So that is the idea. Now, how to see support. So you can spot support by looking at the previous past price action. So if the price has bounced from a certain level multiple times in the past, right, that means that it is a strong level of support. The more time the price has bounced from this level, right, the stronger the support is going to be considered. All right, so I want you guys to keep this in mind. You guys are going to be needing this every single day with the market. Past price session, right? So past price session is pretty much what happened before, price session is now over here. So all of these move over here are considered as the past. This over here is considered as the future, right? So you're always going to find the past on the left side of the market. So you're always going to look left to obviously find little content clues, which is going to give you guys a better understanding of what you can expect for the market to do these next couple of days, maybe even throughout that session, right? All right, so let's say the price session was heading to the downside on the left side, right? This was in the past. We come all the way down here and we form an area of support. Price session starts heading back into the upside, and then price starts heading back into the downside. This over here, it is going to be considered as a context clue, right? That pretty much is going to tell you guys, hey, okay, there's an area of support over here. I'm definitely going to keep my eyes between these zones because there's a possibility that price action can bounce off the market, right? Which is an example right over here. So let's say in the past, right, read this, in the past, whenever price or stock or currency pair hits $50, right? So let's just say this over here was 50 bucks. And then this over here was over 150. Right, it bounces up every time. So let's say that over here it has bounced it a few times before taking all the way to the 150, right? So that means that $50 is acting as a strong area of support, right? So pretty much whenever price session comes back into the zone, this is where traders will expect for price session to possibly bounce out the 50 again in the future, right? So let's say that in the past session, you do see that price session did form this area of support, which if you guys, obviously I'm going to show you guys this and more into details in the next video, but let's say that in the lower time frames, right, price session has bounced off multiple times. So something just like this, we have the bounce up, come back, bounce up, come back, bounce up, come back. So we're really holding this zone very strong. meaning that the next possibility of price action coming over here obviously is going to be between the 80%, 80 to 95%, right? Due to the fact that in the previous price action has been doing the same exact, right? So just repeating itself. Now, like I said to you guys earlier, you don't want to buy the market right away, right? Because again, we are coming from this trend. What is this trend over here? A downtrend, which price is heading to the downside, right? So again, I'm also going to go over market structure so you guys can understand market structure, understand the higher highs, higher lows, switch structure, bearish structure, right? We're all going to be covered that in the next couple of videos. In this case, since I was explaining to you guys, you don't buy right away with the market, right? Because again, you're coming from a downtrend. What is the possibility of price just coming back up, rejecting the zones, and then boom, starts breaking under the 50 zone? Obviously, it is very high. So how exactly are you guys going to buy whenever price action comes into a level of support? So very simple. Let's say this over here was the past, and then this over here is the future. Boom, we reach this area of support. Are you guys going to buy over here? Definitely not. You guys want to look for first a bounce off and rejection. Pretty much a rejection is whenever price rejects the zone and immediately bounces to the upside. So this right here is considered as a rejection. Now check this out. You already guys have the notes, right? So this is where I'll explain to you guys the previous video why it's very important to do your watch list, to do your analysis so you guys can wait for your setup to actually happen. So let's say that we were taking this setup over here. We're looking to take some buy position, right? So let's say that price came into an area of support, right? We are waiting now for rejection. Boom, rejection happened. What is next? We have a break of structure. Perfect. Where is going to be the break of structure, right? Let's say this over here is a break of structure at 55 bucks, right? So it bounced from 50 all the way to 55. We have a break of structure. Perfect. So we bounce from an area of support, right? So support rejection. We have a break of structure. What is this? This break of structure over here was previous lower high, right? This over here is going to be considered as a low. This over here is going to be considered as a low, right? So we have a low and we have a lower high. What is this over here? Once price action comes into these zones and we start heading to the downside, this high over here is now considered as a higher highs, right? The reason why it's considered as a higher high is because these highs are higher than the previous highs, right? So what comes next? Whenever pretty much we have something like this, we wait for the retest of the break of structure. Once we retest the break of structure, which was previous lower highs, right? Previous structures, previous lower highs, we're waiting for this zones over here to now act as an area of support. So previous highs are always going to be considered as well as an area of resistance, right? So this over here ideally is to look for it to act like an area of support. So this right over here, it has to act as an area of support. Once it does act as an area of support, you guys get your bullish confirmation entry, which can be any bullish candle, any bullish pattern. Then you guys are good to enter the buy position. Once you guys enter buy position, you guys can take off. You guys can place your stop loss under the previous lows and then just target any structure that was in the past. Boom, simple, just like that. This is exactly how it is to buy whenever price action comes into an area of support. All right, so now going into resistance. So what exactly is resistance? First of all, resistance obviously is the opposite of support. It is a price level where the market finds a resistance and stops moving higher. So think about it like a ceiling. So whenever price hits a resistance, it often struggles to go above that level, and pretty much sellers are now stepping into the markets, right? So this was pretty much a long time ago. This is when I learned this exact strategy, right? My mentor explained to me exactly how support and resistance work in a very, very cool, easy way to understand. So if you guys stand up right now, right, let's do this little quick exercise. If you guys stand up right now, right, you're pretty much holding above an area of support. So the floor, if we look over here, it says over here, support is a price level, right? Think of it like a floor. So whenever you stand up, right, you're on top of the floor. You're standing on the floor, which is going to be an area of support. Here's the context clue. Support, it bounced back up, right, because support is at the bottom. And then resistance is where it's at. It's going to be at the ceiling, right? So where is this? At like a ceiling. So the ceiling is going to be the roof, right? So this is going to be your resistance. So check this out. You bounce from the floor, you hit resistance. As soon as you hit the resistance or the ceiling, what happens to your body? Your body immediately falls back down. So think about it just like that. Support is where you guys are going to buy. Resistance is where you guys are going to sell. Now, how to use resistance. So whenever price approaches an area of resistance, right, this is where many traders are looking for signs that the price will drop back to the downside, meaning that obviously they're looking for sales opportunity and they can expect for price action to fall all the way back to the downside. Now, how to use resistance. You can find resistance by looking at the price or the past price action, just like with support. And the price has tried to go above in a certain level several times, but failed to do so. That is considered as a strong area of resistance. So, literally the same exact example that I gave you guys over here works the same exact way with resistance, right? So resistance, you're always going to find it on top of the markets, right? This is where you guys are looking to sell the market at an area of resistance. So let's say the price action comes back up over here, touches this zone over here, resistance. This is considered now as an area of resistance as well. Resistance, well, I'm going to explain this later on more in the market structure, so we don't mix, so I don't get you guys confused, but just stay tuned so you guys can really understand it. But resistance, right, it's always going to be on top of the market. Doesn't really necessarily mean that it's going to be this or going to be a valid area of resistance. No, it's always going to be on top, right? But pretty much what it means, to give you guys a very quick understanding, right? We're not uptrend. These highs over here are considered as resistance. These lows over here are considered as support, right? And then it obviously continues heading to the upside and then doing the same exact thing. Same thing whenever price action is heading to the downside, which is a downtrend. Oops. Which is, my bad guys, which is a downtrend just like this. These previous lower highs are considered as area of support. These lower lows are considered as area of support. Lower highs are now considered area of resistance. Why? Because resistance is on top of the market. Support is on the bottom of the market. Same thing here. Support is on the bottom. Resistance is at the top. So whenever price action reaches a zone of resistance, are you guys going to sell right away? Of course not. You guys are going to wait the same exact thing right over here. Rejection, break of structure, pullback, entry signals. Simple, right? We reach the area of resistance. What do we wait? Boom, rejection. What do we wait next? Pullback. We wait for a pullback. These over here, right? So if you guys head to the upside, we were heading to the upside, creating higher highs and higher lows. We can't sell if price action just continues creating higher highs and higher lows, right? That is pretty much going against the trend and not trading with the trend, right? This is, if you guys go against the trend, you guys sell the market right away without any break of structure, most likely price is just gonna come reject off these previous highs over here and then start heading back to the upside. So you guys must always wait for the rejection and a break of structure. So the right way to sell is that whenever we're heading to the upside, we're simply creating higher highs and higher lows. Boom, come into an area of resistance. Boom, we wait for rejection. What happens next? What do we wait for? We wait for pullback to retest the previous broken structure, which is the break of structure, which in this case is going to be the previous higher lows, right? Or area of support. So we have the resistance, which rejected. We do have the break of structure right over here, right? This is the break of structure. What do we wait for next? We wait for price action to give us a pullback, right? Once it gives a pullback, we need to wait for another rejection, right? All of this is all like pretty much whenever you guys are looking for entry and you're pretty much your analysis for the day, this is where you guys want to focus on the lower time frame. Again, we're going to go over this later on in this next video, but this is pretty much the idea. So once price action reaches this zone over here, we wait for the rejection. Once we have the rejection, we obviously look for a bearish confirmation, which can be any bearish candle or any bearish pattern. Once we get that confirmation, then obviously we can sell the market. We place our stops above the previous highs, and then target anywhere down below, which can be an area of support or any key level that obviously you guys want to target at. And then boom, this is where price action hits your target. Now, if you guys read this example over here, same exact example as the $50 one. So if price or stock or currency pair has tried to break above the $100 several times, but always comes back down, then that means that the $100 is acting as an area of resistance, right? So this is pretty much where traders are not going to be looking to take the sell at $100 because we have seen multiple rejection over time. But again, resistance is not valid if it really doesn't do this, right? Again, you don't want to be trading just because it touches the top. You want to sell. This is invalid. This is incorrect. This over here is the right way to actually trade support and resistance. Now, how to use support and resistance in trading, right? So pretty much exactly what we went over, but this is just in writing. So buying at an area of support. So whenever price approaches an area of support, right, this is where you guys are going to be looking for signs that price will bounce back to the upside. So again, just like I told you guys can either find any bearish candlesticks or any bullish pattern in this case, which is support, any bullish pattern that obviously indicates that price action has a good chance of heading back to the upside. Now, selling at area of resistance. Whenever price approaches an area of resistance, you guys are looking for price action to head back to the downside, which is going to be a reversal pattern. Anything with the support is always going to be a reversal pattern. So this is a good sign, right? Where obviously traders are now looking to step in and start selling the market all the way back to the downside, right? Now we have breakouts. What exactly is breakouts? So there's going to be some times where breakout is another strategy with support and resistance. I personally don't use breakouts anymore, which I'm pretty sure, well, there's different ways to explain it, right? I forgot, I think those were like impulse breakout, which pretty much we're at an area of support. If price action breaks under, right, then you guys can enter sell. These are pretty much impulse trading, right? I used to trade just like this, but I no longer trade like that anymore, which is not really part of my strategy. But what it says over here is that sometimes the price will break through area of support or resistance, which is called a breakout. If price breaks above resistance, it could continue higher, and if it breaks below support, it can continue lower, right? So this is where traders often watch for breakouts to catch the moves, big moves or small moves. The reason why I don't trade breakouts is most likely like an impulsive move, right? You're pretty much catching the move right away. Me personally, I obviously like to wait for, pullbacks and retests of area of interest. I no longer like to trade off impulsive moves. Why? Because again, it is high risk, right? And what is the chances of price always going against you? Which is high, right? Same thing with any type of strategy. Price is always going to go against you. But with impulse trading without any confirmation, it is very, very, very risky. And that is not the idea when it comes into trading, right? Me personally, I always like to trade the reversal or the continuation of the market, right? Which is simply if price starts breaking above, you're simply just waiting for reversal, which is just retesting the zone to then head to the upside. If price is heading to the downside, you're waiting for the same thing, waiting for reversals for continuation of price action to head back to the downside. So what is this over here? Whenever price hits an area of support or resistance, right, it can either reverse, which is bounce, or it can continue through a breakthrough. So this is pretty much where traders obviously, they wait for price action to reach an area of interest, right? So once it hits an area of interest, this is pretty much where you decide if you're going to take the bounce or if you're going to wait for price action to obviously just reverse and just start selling the market or buying the market, right? So reversal or continuation of the market is pretty much the idea of what I do. So pretty much the whole entire example that I give you guys here are always going to be reversal patterns, right? Or pretty much continuation of the trend. Same thing with the support. It's always going to be the continuation with the trend. So the idea is to always trade with the trend and not against the trend.